Top of the morning, everybody. Top of the morning. Today we're going to be doing a live review of a client's profile and see what they look like in regards to getting them funding. The great thing about business funding is even if your personal credit isn't optimal, you're still able to get some financing as long as your business is in a good position. With this particular client, she owns and operates a store. Her store is doing between 20 to 60,000 a month, and she's looking to acquire more capital so she can get inventory and bring on new hires. So I'm excited to take a look and see what her profile is like and things of that nature. To give you some background, she's had MCAs before. She's not a fan of MCAs. And she's working with a credit repair. Yes, sir. And she's working with a credit repair specialist right now that's currently working on a personal credit. So what we're going to do, we're going to go through a profile, and there are going to be some key elements to a profile that I want to bring to everybody's attention, right? And it's important that we understand that your credit score is not going to be the determining factor when we're talking about business credit. It's going to be about the business profile, how the business is structured, and the what is on your credit profile. Because this young lady, she actually has the scores are pretty decent. I mean, she has a 671 as her lowest score. Her highest score is a 714. A 714. So when you book a consultation, this is basically exactly what we're going to do. We're going to go through your personal credit first to see what opportunities we have there. We start there because oftentimes being able to PG your way to capital is going to be the fastest way, right? There are a lot of no doc programs out there. Even Chase right now has a business loan that goes up to $250,000, no docs. The key to that though is you need to have good personal credit because they will PG, right? So let's take a look at this profile. I'm going to grab my phone and turn it around so you guys can see the screen. You guys can see what I'm looking at. And we're going to go through this thing and we're going to look at it just like someone who is lending the money is going to look at it, right? So we want to look at it from a lender's perspective, okay? And hopefully this gives you all a good idea of what you can expect when you are deciding to go for funding or when you're reviewing your particular file. Now, if you want to, if you want somebody like myself to review it for you, because maybe you're not too familiar with how to read your credit profile, you can absolutely do that, right? That's something that I can do. We can always, I'll drop a link in the comments where you'll be able to just book a consultation. Or if you want to do it live on this call, I'm only going to be live for like 30 minutes to go through this. I'll drop the link where you'll just pay $1 for your credit report. I can review your credit report live and not only review it, but also give you some tips, tricks, and strategies on how you can go about getting your profile in position for funding or some other resources that you can use in order to get some funding, right? Even if your credit isn't exactly where you want it to be optimally, okay? So let me just do this real quick. Let me know how everybody doing. My guy KP was good, my brother. You know what I'm saying? So let's get to it, everybody. Let's definitely get to this. Let me drop the link. So again, if anybody wants their credit profile reviewed and you want some feedback to see where you are in getting funding, you can actually just go ahead. How do I move this thing out the way? Sorry, the little emoji button is, let me see if I can, there we go. Boom. All right, so that's pinned to the top if anybody wants If anybody wants to grab their $1 credit report, and then you can just email it to me. I'm gonna drop the email in the chat as well. But we're gonna go through this, and I'm gonna show you guys exactly what we'll be looking for so you can avoid these common pitfalls. This is going to be great if you've gone for funding and you've been denied and you're not exactly sure why you were denied, or if you if you're afraid, maybe you think you're in position for funding but you're not quite sure. So let me grab the camera here and we're going to go through this real quick. We are absolutely going to go through this, and I want you guys to see exactly what I'm seeing. All right, so y'all probably see, right, this client has a pretty good profile, at least from what we see right here, right? 714, 701, 671. Now, with the Equifax, I would say we want to get this up. Before we go for funding, we want to have at least a 680, at least. I would even err on the side of caution and say a 685, 690, right? We definitely want this higher before we tackle any type of Equifax lenders. The other thing that I see is that there are currently some fraud alerts on her credit report, right? So I see here a fraud alert, fraud alert. Before you go for funding, remove your fraud alerts. What will happen is that having a fraud alert is great for protecting yourself, but it slows down the funding process. Some lenders will outright deny you if you have a fraud alert. So if you're looking at that, even if you have good credit and you're wondering why you're getting denied or why you're not getting any pre-approvals, it's probably because you got this fraud alert. So go ahead, take that off. It's super easy to take it off. You just send in, you either call in or you may have to send in a letter. Okay, that's a common, a very common pitfall for a lot of people going for funding, even with good credit. That fraud alert instantly will have everything blocked. All right, so we see their credit score is pretty good. Now, let's get into the nitty gritty. Okay, so look at their credit profile here. We're looking at the open accounts. We're going to be looking at the delinquencies and derogatories. So typically, when you're looking at going for funding, we don't want any delinquencies or derogatories, especially when we're talking about leveraging your personal credit or going for a PG, right? So what we want to do is actually increase the number of open accounts and increase the number of positive accounts on this credit report. I would say before you go for funding, you want to have at least 5 positive accounts. Like, so Experian is pretty good, but the thing is these delinquencies and derogatories. But we haven't really decided if what these delinquencies are. It could just be one late payment, which we can probably work around, or the delinquencies could be really old. You know what I mean? Some of these delinquencies could be from 3, 4 years ago. Not exactly sure, but we're going to go through. Some other good things about it, she don't have any collections, so that's amazing. And her inquiries are good, right? We only have 1 to 0. When we're looking at this from the lender standpoint, you want to have as little inquiries as possible. So her not having any is great. So right now, just looking at the summary, I see we want to strengthen the number of accounts across the board. So if you're in a similar situation, go ahead and start looking at beefing up these accounts. I would say have a minimum of 5 reporting across all 3 bureaus. Well, they're not bureaus, they're credit reporting agencies, but y'all know what I'm saying, right? So let's look at the actual accounts that we got. We got something from Ava. Ava is pretty cool. Ava Finance. It's like a starter, a credit building account. Okay. The credit limit is okay, 2,500. That's cool. Now, when we're looking at doing a PG, we want to have some credit limits that are $5,000 and $10,000. So we're going to keep looking through and see if she has those type of accounts on here. So keep following along with me and take inventory yourself. Write some of these things down and see, okay, even in the comments, let me know how much you think this person can get for funding if we're going for a PG. Now, as I go through this, I'm looking to see, okay, will we be able to PG this, or is this a situation where we may have to do business financing? Okay, so here we have a revolving account. It's with Bank of America, a secured credit card. Okay, cool. The credit limit's kind of low, so she's in the rebuilding stages. Absolutely nothing wrong with that. Nothing wrong with being in the rebuilding stages. Her payment history's looking amazing, so we like that. Same thing here. The credit limits are kind of low, so we definitely want to see more higher credit limits. We want to see much higher credit limits before we decide to go for PG. Now here, let's see. So I would tell her, right, one of the things after reviewing this, where I'm going to tell her is get higher credit limits. Okay. We're definitely want to get higher credit limits on this one. So this, we're looking at a credit limit of 850, but her payment history looks amazing. We're looking at some amazing payment history. On time payments is great. Same thing here. The credit limit's kind of low. It's not a problem, but we definitely want higher credit limits before we start going for a bigger bag. Just think about it. You're asking for someone for 40, 50, 60, 70, $100,000, but the most they see in your credit report is 2,500. From the lender standpoint, they're not going to be comfortable doing that because there's no track record of you managing large sums of money, right? So that's how we want to look at this. Before we start deep diving and trying to get six figures in funding, we want to show them that we already have access to six figures. Same thing with this one. This is just a rental agreement. This is like a rent reporter account. There's nothing wrong with that. That's great. Boom. Now, first progress. Okay, this is where we see some challenges, right? So, with this number of late payments, even though these late payments are from 2 years ago, we're going to probably have to go a different route. So, this is how I'm going to get into how we would solve this and even work around this, right? So, I believe she's still working on disputing this account to get these late payments off. It's all good. This isn't going to keep her from outright getting approved. We just have to work around it. And that's why I want everyone to understand. Late payments, when you're doing conventional lending, late payments is like a death sentence. You want to clean up as many of these late payments as possible before you go for funding. Typically, they don't want to see any late payments at all, especially if we're talking about you're going to a big bank like Chase, Wells Fargo, Bank of America. They do not like to see late payments at all. Keep that in mind when you're going for the Chase Inc. card or American Express business credit card or Wells Fargo business lines of credit. We won't be able to go to those banks right now with all of these late. So I'm going to let her credit repair person keep working their magic on that. Now let's see this last account right here. Credit One Bank. Okay, that's cool. Again, the credit limits super low. Boom, right? With these late payments, and these are recent, this is just from this year and last year, it's going to be a no-go. We're not going to be able to PG anything with the series of late payments that we have. And believe me, I get it. Life happens when you, especially when you're a business owner. She's doing all of this herself. She's learning as she goes. She doesn't have any type of business background, right? She didn't come from a family of entrepreneurs. She just decided that she wanted to start a store. And this is something that she just loves, right? So she, had those bumps and bruises along the way. So I'm not faulting her. I'm not looking down on her. There's nothing negative about her per se, right? But these, just looking at it from the lender standpoint, lenders don't want to see all these lates. So what can we do about it? What can we actually do about it? And then we have this Tory card, also a low payment. So let's talk about the solutions, right? We took a look at her profile, and this is something I would do for any client. And this is what, when they're going through and talking about your pre approvals, how they're breaking this down. So, of course, she already has somebody working on her credit, which is great. So, we're going to continue to let this person work on her credit because she has way too many late payments, and those late payments are way too recent. So we're not going to be able to just jump out there and go for the big boys. So we're not able to do Chase. We're not able to do Wells Fargo, Amex, all the ones you see on the internet. But what we can do is start with credit unions. Credit unions are more lenient. Now, she already has a credit union that she banks with. That credit, she's located in Missouri. So part of the strategy will be going to that bank. I'm going to do some research for her, see what products they have for her business, or even maybe on the personal side, and see what she may qualify for from the credit union. Credit unions, like I said, they'll, even with recent late payments, they may still actually approve you. Recently, I had a client who she had a recent late payment, okay, and she went to her bank. This is actually with USAA, so she's military. Military banks show a little bit more grace. Like Navy is more graceful. If you have late, they'll still approve you even if you have a bad personal credit score. And USAA. So in her particular instance, I told her to remove the fraud alert and call them and see if they'll reverse the late payment. So when she called, they didn't reverse the late payment, but instead of reversing the late payment, she got $11,000 in more credit. They increased one of her credit limits by $3,000, and they gave her a new credit card with an $8,000 limit. So it's possible to continue to get some funding even with a late payment. In her particular instance, she only had one late payment. It was about from 2 months ago, but she was still able to get an additional $11,000. With this client, she has a lot of late payments. So we definitely want to see how her credit union can work with her. With her credit profile being the way that it is, we're going to start looking at her business. So right now, her business is doing between 20,000 to about 65,000 a month. Her business is also 2 years old. This is great because even while her personal credit is still being worked on, her business qualifies for what we call revenue based lending. Revenue based lending is lending you can get based on the amount of deposits going into your business bank account, not your personal, your business bank account, and based on how many credit card transactions you have. So PayPal offers revenue based lending, Stripe offers it, Square offers it, or any type of like credit card merchant payment processor offers revenue based lending. And what will happen is that they can issue you a line of credit. Well, really, it's a loan. They'll issue you a loan based on how much they see is flowing through your payment processor account, and they'll take a percentage from each and every transaction. The great thing about this is since it's a loan, you're going to get all that cash infusion into your business up front, and then you literally just pay it off as you bring in revenue. Excuse me. It's an amazing opportunity, and here's the great part about revenue based lending. When you're doing it through your payment processor, there's no credit check. And with these type of loans, some of these things go all the way up to like $2 million. It's totally based on how much money is cash flowing through your business. So that's one of the avenues that we're going to be looking at for her since she has that high cash flow. Another great thing is with these revenue-based loans, they'll lend up to 100% of your revenue. So imagine you're doing 3 months consistently of $60,000. That means you can get a $60,000 loan that you only pay back as you get sales. That's amazing. Another thing she needs some funding for is inventory, right? So I work with a lot of different lenders and brokers who offer inventory financing. So with inventory financing, what that is basically like a vendor can give you net 30 terms and say, hey, we'll give you, this, we'll send you your product and you pay us back as you sell the product. That's one way to do it. Some companies will actually loan you the money so you can buy the product. And then, of course, you pay them back as you sell your product, right? That's inventory financing. There's a lot of different things that go into that. The age of your business is important. Some need your business to be at least 2 years old. The other, of course, is your revenue. They like to see $10,000 or more going through that business bank account. And the reason we're focusing on this because this is all based on your business. We're not looking at your personal credit, right? The other thing is that another opportunity is it's not as nice up front because the fees are high, but if you need the cash and you know you're going to be able to make a profit and grow your money quickly, you can do it MCA. Now, MCAs have these crazier terms where you may have to pay back daily or weekly. But here's the secret. I'm going to let you guys in on this. Even with MCAs, you can always negotiate the terms if you have good cash flow, if you have higher cash flow, right? And if you have a standing relationship with that MCA firm, you can start negotiating better terms. Instead of having to pay back daily or weekly, you can negotiate monthly, right? 30 days to pay back the MCA. This is a little tip and trick that we use to help drive down the cost of these MCAs. Because when you first start with the MCA, the interest rate is crazy. It's crazy, right? And it's about can be like 40-60%. But as you build a relationship with them, that percentage comes down. Hey, hey, how you doing, Bella? That percentage will come down. Okay, so these are some ways, and there was something else I want you guys to definitely keep in mind about the credit score. Let me actually show you this one more time. Great, 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 Bella, great. Thanks for tapping in. We just going through a credit report, looking at it from the way a lender will look at it, and looking at a client, see how we're going to get her some funding. So you guys see this credit score, right? This is a pretty decent credit score, 714, 701, 671, right? Now, anybody would probably say that this is decent credit. There's no reason for this person not to get some level of funding. But here's the thing. The credit score doesn't always matter because once we get down here to the bottom, we see these negative accounts with recent late payments. So it's very possible to still be in the 700s with crazy payment history or with negative payment history. So we don't always solely want to focus on just the score. This is something I see with a lot of newer entrepreneurs and business owners going for funding. They'll see that they hit the 700s, they'll get excited, and then they immediately jump off the porch and start submitting applications, not knowing that these late payments, even though it's from last year, is going to get them denied. And they'll end up frustrated and upset. And it's like, damn, why am I getting denied? I got a 700. Like, yeah, you got the 700, but you have these late payments. You want to get rid of these late payments. Now, as a business owner, the great thing about a business owner is that you have some other options. You can rely on the strength of your business. You can rely on the strength of assets that are under your business name. And if you have any credit partners, you can rely on them, right? So if you guys want to set up any type of appointment with me, we can do this for you too. You can go through your personal credit report, see if you're in position for any no doc programs. And if not, we'll take a deeper look into your situation, whether it's your business, your assets, your cash flow. Do you have stocks, bonds, or something that we can use to get you some funding? Because everyone can get funding, everyone is fundable. It's just the strategy in which you use to get the funding. And really, all you have to do for that while I'm on the live, what time is it? I got 11 minutes, right? What I'm going to do, I'm also going to go live later this evening and run this back for everybody who may have missed it in the morning. You just download, you'll get your $1 credit report using a link that I have pinned in the comments, and you can actually just email it to me. And on the live, I'll go live and I'll do a live review of your profile, give you some tips, some tricks, some suggestions on how you can still get funding, even if your profile, well, just based on your profile. Maybe your profile is already good to go. You just need to know, you're already locked and loaded. You just need to know the target to shoot at, right? I can do that. Or if you're still trying to figure out what weapon that you want to use to deploy to get the job done, I can do that for you, right? All it is just I just need to see your credit report so that we can have that conversation, right? Now, for those who may be a little more shy, they don't want to put everything out there, or you want a one-to-one consultation, then I do have links in the description where you can book a one-on-one call with me. It's in the description of this video. It's also in the channel description. You can book a one-on-one consultation with me. It's about uh, 30 minutes. Same thing. We'll go through, check everything out. And from there, determine what you may qualify for and what strategy is going to be best for you and your business. Y'all let me know if this was helpful. Did it give you any more insight into how to look at your particular profile so that you can determine, what funding strategy is going to be best for you? Because that's what this is all about, having that strategy. And if you don't have a strategy, working with someone who can help you develop and put together a strategy so that you can acquire the funding that you're looking for. The worst thing you can do is shotgun your application, get denied multiple times, and then you end up discouraged, saying that this thing doesn't work, or you end up stressed because you're trying to grow your business, but you keep hitting a brick wall because you don't know where to find the money. You don't have to keep guessing. We're here. I'm here. You can book the consultation, get your profile looked at, and actually have a game plan put together for you. Even if it's, hey, you're going to need some credit repair. You need to make sure that your business is formed properly. You need to make sure that you got your DUNS number. Hey, get some vendor trade lines to build up that Paydex 80 or that Paydex 100 score. So then we can start looking at getting credit from vendors and doing no PG financing. There's always a way to get access to capital. You just need someone to help you figure out what way is going to work for your situation. No one situation is completely homeless. Not homeless, hopeless. My client here, she's been in business for 2 years. It's been a battle. She's been doing MCAs. She's been doing vendor financing. She's been doing inventory financing, right? This is her first time even seeing a credit score of 700. And I'm here to help her secure even more money, right? So with this, my job is to not only look at this as if I'm an underwriter, but also help her paint the story, put the numbers together so that when an underwriter, a banker, whoever looks at the numbers and look at her profile, it tells a winning story. It shows that this is a business that deserves the capital that it deserves the capital to continue to grow and to continue to pay its debts, right? So we're out of time. Listen, I appreciate everybody for tapping in. Let me know if this was helpful. Let me know if reviewing the profile and giving you some alternatives gave you some insight. Okay. If this is something that you want done for you or yourself, go ahead and click the links in the description, book a call, and we can also look at your fundability. In the meantime, in between time, I'll talk to everybody later. I will be live again later tonight, like 8 o'clock this evening, 8 o'clock Eastern Standard Time. I will see y'all again tonight. Everyone have a great one. Don't work too hard. Peace. Damn, I forgot to like, share, subscribe on